What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Thursday, March 14th. Alright guys, Nvidia stock here today down $10.25 a share. That's minus 1.12%. In regular hours, it's down about another 2 points here after hours. As always, volume's going to be really low. Take that after hours movement with a grain of salt. Really easy to bully and pump stocks in the after hours. So don't ever get too worked up about the after hours unless, of course, there's a business specific catalyst that is usually going to be like an earnings or something that really pumps the after hours volume. My kind of rule of thumb is if after hours volume meets or exceeds kind of the intraday like lunchtime volume of the day, then it's usually a more definitive move, and that typically is going to require a business specific catalyst. But let's get started here on Nvidia today with our daily ritual, the volume profile analysis here on the 5-minute chart. By the way, if you have not done so already, please subscribe to the channel. Helps out the channel a lot, and I greatly appreciate it. My goal is 5,000, still by market open Monday. I think we can blow that away with your guys' help. Now, here on the intraday 5-minute, what I'm really looking at, I need to see volume that's out of context, but it has to correlate, of course, with an obvious move in stock price. Compared to yesterday, those moves are a little harder to come by today, but off the open, I'm primarily interested in this intraday lunchtime move, which is a little bit out of context, okay, but we have to really determine that by looking at the volume. And then this kind of smaller pump and a little bit of a fade, we might as well take a look at, though it is a bit of a smaller move. Now, in doing this, guys, we're able to really pull out a bias, kind of a hidden bias in the market that we don't get by just looking at a chart. I think something that gets overlooked by a lot of traders is that two moves don't necessarily have to be created equal, even if they're equal moves. For example, if the stock starts at 900 bucks, pumps to 925, and then fades back to 9, a lot of people think, okay, that's just a net neutral. And in terms of price, they're of course right. However, if you look at the volume profile, you can pull a lot of information out of that if something is out of context. That tells us that maybe one side or the other was a much stronger move. Okay, and that gives us insight into the real, quote-unquote, hidden bias of the market in that particular move. So let's start here from left to right and take a look off the open. Again, as expected, we typically expect that first volume candle off the open to be the highest. That's very common to have the most volume right off the open. And when you combine that big volume bar with that bigger red candle immediately off the open, if you're in chat rooms, forums, stock twits, Reddit, I don't care, Discord, our free Discord maybe, tonight, and you see a bear talking about, hey, you guys saw that big red bar off the open on massive volume, right? That's a huge bearish sign. Well, in my opinion, it's not really that simple. That's completely within context. It's not out of the norm at all. So what I'm really needing to look at, since that is a contextual opening bar, is the bars that follow. And the only one that doesn't really fit is this pop here. However, you guys know I need to see 3 to 4 consecutive consistently higher volume bars for me to really look at it as a serious, more definitive sample size of volume. And when we see kind of one standalone bar that doesn't really fit the bill of that fade, that very much so expected fade off the open, and then we also compare that to what the actual candle looked like with this bottoming wick, which indicates a big battle between buyers and sellers anyway, which is going to pump up the volume regardless, I can't even look at that as anything definitive. So we have to move on from there. Bears, I wish I had better news off that open, but it'd be a force to try to pull anything out of there. Now, the second move that I'm really interested in is this lunchtime kind of fade back upside with this little pull-in that we saw. If we take a look at that, we did see slightly increasing volume on the initial run of that upside move. We saw a lower volume pullback, and then a bit of a sloppy volume pump with a couple of mixed bars. The reality, bulls, here is that if we saw 3 or 4 green volume bars, of course, green candles, that had 800,000, a million shares of volume consistently over 3 plus bars, that would stick out like a sore thumb. That would be a very, very strong bullish bias on that upside move. Truth is, similar to how the Bears didn't get their way, bulls, I'm sorry, I'm not going to give you your way there. It's just not definitive enough, and I'm have to remain unbiased. Otherwise, what use is doing this? And in kind of the back quarter of the day, we saw this little bit of an upside pump and then quick fade. So really what I'm interested in to see how did that quick fade correlate, because of course the quick fade is the latter part of the move that happened more recently than the upside move. So that is the most recent opinion that we got, since we did get consolidation into the close. And what we did get is a little bit of increasing volume that started on that green bar, finished up on the red bars. However, again, the only things out of context is kind of, these two kind of matched. You saw a little bit of an increase there. There's really no use in even going deep into this because we didn't see big out of context volume on 2, 3, not even 2 really, but even 3, 4, 5 consecutive red bars. So it's important to look at the volume profile. Completely ignoring it, I think, is very foolish, because even when you're not able to really pull anything out of it, that tells a story in and of itself. Because you compare that to, okay, was it a green day or a red day? For example, if we had a big 7% green day today, and there was nothing in the volume profile that supported that there was a large sample size bias to the bullish side, well, bulls, that would be, the stock's still up 7%, but from a deeper perspective, that's not really a great look, is it? Now, looking at this from that same bullish perspective, a red day like today, you're able to look at the volume profile, and a lot of bears may expect that this might have a heavy bearish bias. The truth is, there really was not much of a bias in either direction. So bulls, if it's going to be a red day regardless, and we can get over that as a fact, it's down 10 points, 10 and a quarter. The truth is, from a volume profile perspective, best case scenario is that the second half of the day happens to be incredibly bullish. It just didn't happen to make up what it lost, right? But the second best scenario is that there's no bias at all, because the worst case scenario, if you're a bull on a red day, is that there's massive bearish bias. So we can't just ignore the volume profile, can we? But let's move on now and start taking a look at levels. The self-fulfilling prophecy, psychological levels that I'm going to be paying close attention to here tomorrow. We discussed in last night's video, if you caught that video last night, I'm covering Nvidia every single day. We were talking a lot about how yesterday we were able to reclaim both of these moving averages, right? The 50 period and the 200 period here on the 30-minute chart. Very, very contextual moving averages, heavily watched on a very popular time frame, right? The only reason I care to look at this at all, we had reclaimed yesterday and pulled away. That was a very good sign. And we had discussed how on any retest of these moving averages, whichever one was the higher moving average at the time, because the 50 period had not yet crossed over the 200 period. Of course, we expected it to do so. I would have loved to see that one hold. Now, this morning got a little bit sloppy. On the sell-off, we dipped down and we kind of made a sloppy test of that 200 period, but we ended up holding it. Okay, making a slightly above average volume pull away up to that 50 period. You can see this is obviously very psychological here on a popular time frame like the 30-minute. And we were able to kind of make a sloppy hold of both of those even as they come upside today. Now, was it clean? No. Clean would have been a test of the 50 period, right? And a hard high volume pull away higher regardless of the finishing percentage away from that 50 period. That would have been a clean day here on the 30-minute with the self-fulfilling prophecy levels, the most popular indicators we can possibly slap on a chart, on here. But Nvidia was able to get the job done nonetheless, even though we locked in a small red day. Truthfully, though, today, it was a hold, but it was a sloppy hold. From a bullish perspective tomorrow, I would ideally love to see some distance put in between the stock price and the 50 period. The 50 period is, I would expect it to continue to move upside. So the stock has a little bit of work to do in order to, hold both of these levels. And if the stock is able to get back above that 50 period here on the 30-minute, I would not hate to see, bulls, yes, a little bit of pullback into that 50 period and then a high volume bounce away. Volume is very important and the timing of such when you're looking at a retest like that, because, listen, if today was any evidence at all, just because you pull away from a quick moving psychological level on a fast moving chart like the 30-minute, you're never really in the clear. You're just making progress or going backwards. So bulls, best case scenario here tomorrow is a pull away up through the 50 period as the 50 period continues to move higher, and then a pull in on average to lower volume, and then a high volume bounce back upside as the 50 period again continues higher. That's best case scenario. Now you can see here in the after hours we're dipping back below. Again, as always, take after hours with a grain of salt. It's less definitive, volume is lower. The real test is the market open the next day. Now also bulls, if we're unable to hold the 50 period, that 200 period is another potential psychological barrier, and a downside break of that would be the bears' best case scenario. But really, a rip down through on high volume, average to below average volume retest, and then again, high volume downside break. Bears for you guys tomorrow here on the 30-minute chart in particular, that is best case scenario. All right. Now, is the 4-hour contextual? Let's take a look, and you can see here, we're even more in play than we were yesterday, so we better take a look. We are currently about 4.3, 4.4% away from that 50 period here on the 4-hour chart. Now, one thing I would like to point out here, since we covered this yesterday, we saw the 50 period on the 4-hour crossing above 850. That's a great thing to see, right? Today, we claimed about another 10 to 15 points on the 50 period. The 4-hour chart, the moving averages, the 50 period is going to be faster than the 200, right? But it's still slower moving, right? The longer time frame you go, kind of the thicker and slower the moving average becomes. Well, why do we care at all, right? On an upside move, it's always good to get as many psychological barriers because, believe me, we're looking at the most popular time frames. And I would say more than 50% of serious big money traders and investors are looking at all three of these time frames in unison and considering the most popular areas of interest, like we're exactly doing here every day. So wouldn't it be more ideal to have a psychological downside barrier getting up underneath as close to a new high stock price as possible? Generally speaking, it would be best to have that occur on the daily 4-hour and 30-minute rather than just the 30-minute, right? That's why I care, because Nvidia's stock price is higher substantially than it was a few months ago. So the name of the game, the idea really is to put as much doubt, if you're a bull, into the bears' heads as possible. How do you do that? Well, you get the psychological barriers pressing hard up against the stock as the stock presses higher, and those barriers continue upside with the stock with as little gap as possible. Because like it or not, human beings, therefore algorithms, because they're programmed by human beings, see those as potential areas of support. Of course they can break, but the more potential areas, the better. The stronger that psychological bias becomes. That's all we're doing here, really. So bulls, two things here tomorrow. That 50 period on the 4-hour, get as high as possible. Day by day, understand it's going to take time, but gain as much ground each day as possible to the upside. That's the goal. Number two, any downside test of that 50 period here on the 4-hour chart, again, it's a little bit of a move away, but we've seen Nvidia do crazier things. I want to see, I don't care what volume it does the test on, as long as the bounce away is on high volume. Now, bears, two things. Ideally, you want that 50 period gaining as little ground per day as possible. And on a downside break, you see a hard break on high volume, at least slightly above average, right? At mid to maybe average to lower average, below average volume retest, and then a hard high volume rejection. Because that's a break, but the break, for me is not good enough. The retest and the confirmation on a hard high volume rejection, at least the short-term confirmation, right? Now, on to the daily. The daily is by far the most important chart. It has the most eyeballs, it's the most contextual, and it is the simplest, which is good, right? Because the simplest story is always going to have the most decision-making being made around it. Okay, now you can see again, the moving average is completely irrelevant as of right now. Below 700, just about the 200 period is about $500 a share right now. The story here today is three numbers, kind of like 3.5. $900 is still the obvious story. Listen, bulls, if we can't hold $900 a share, then that delays things, at least in the eyes of the bears. In the short term, of course, these videos are all geared toward the short term, shorter term analysis day by day. Kind of that small steps to the moon mentality. But $900 is the battle tomorrow. Bulls, I want to see 900 hold. Now it held today. We tested below, right? And it held, so that's a positive thing to see. I don't really mind if it closed red, as we've discussed in the past, as long as we hold the important psychological levels. That doesn't mean that we're out of the woods, though. We're even closer to a test today as we compared to yesterday. Bulls, priority number 1 tomorrow. Hold 900 bucks a share. Use that as kind of a trampoline to bounce our way back up toward 950, through 950, through that all-time high, which is kind of an arbitrary area because really I'm looking at 950, and 1,000 from a bullish perspective. Okay, 850 is that potential backstop upon any downside movement. But on Nvidia right now, the obvious thing to do is look at each 50 buck level as a psychological area. I'm thinking of each one of those as kind of a stair. All right, you can stair step upside or stair step downside. But if you're a bull, on a red day, back testing one of those stairs, the last thing you want to do is lose that stair the next day. Bears, that's exactly what you're trying to do. Right, crack down back below 900 bucks a share, but just a straight crack. I mean, listen, a lot of people take this out of context and say, hey man, we broke for 21 minutes and it didn't hold, what the heck? It needs to hold for a big chunk of the day with a lot of volume coming in, testing with a big sample size. Does Nvidia belong below 900 bucks a share? That's what the market is, right? It spends 6 hours below 900 bucks a share and closes at 875 with a retest of 9. We dumped to, let's say, 890 off the open, retest 9. A lot of volume comes in and we reject hard and close at 875. That is a break and hold, at least on the day. Now, 2 or 3 trading days that occurs, the break and hold becomes even more definitive. But a downside break for 7 minutes and a reclaim of 9, that's a hold of 900, not a break. Our thought process has to be contextual with the kind of trading we're doing. If you were micro scalping, which is what I do every single day, you're going to have people trading the break of 9, but they're tearing out within mere minutes. Right? And then the problem comes in like online chat rooms and things like this. I think the real problem comes, the confusing part for beginners and even intermediate traders, is when you have micro scalpers talking with swing traders, talking with long-term investors, and you have one person calling out a downside break of 9 and the other saying, wow, what a beautiful hold of 900 bucks a share. It's confusing. The answer to all of this is context. You have to know which one are you. Which, you know, by the way, all of these strategies you can just learn for free on the internet. It might take some time to put it all together and find a bunch of good resources and put it together, but you can learn it for free. To learn how to trade, I didn't spend a dime. So I encourage you to try to do that. If your goal is purely just to try to expedite that process, that's where I think a tool like our gold server, at the link in the pinned comment, comes in handy. Because, you know, I'm in there every day kind of guiding people through the maze, trying to make sure they don't get lost. But the truth is, step number 1, decide. Do you want to be a micro scalper, a swing trader, a long-term investor, or a mix of all three? You want to trade spreads on options? Whatever you want to do. You want to be a theta farmer, right? You sell premium, essentially, try to capitalize on changes in Vega, Gamma, obviously Delta. You want to be a short premium seller? Theta's your best friend. Decide what you want to do. I decided I wanted to be kind of a mix with a focus on the micro scalping side of things, and then taking those profits, treating that as like a job, a revenue stream, and dumping that into the long term. Okay, that's my play as far as the markets are concerned. Generate revenue, working, scalping, which is work, by the way, dumping it into the long term. Decide what your market play is, and then I encourage you, learn it for free. Or, if you have your heart set on trying to expedite that process, find a resource or a coach you trust. Now, implied volatility. It's still sitting a little bit high. Okay, understand the higher IV is in comparison to your intended trade time frame, the higher the risk of IV crush, potentially. Okay, just make sure that fits within your risk profile. If the position still makes sense, then you leave it on. If you're like, that IV crush potential is kind of outweighing my reward here, then you can think about taking that off. It's important to really understand where that IV is, though, because that is the culprit for a lot of traders who don't understand implied volatility or Vega. Really important, heavily overlooked. Now, my favorite part of the video, and I know a lot of you guys' favorite part here too, this is something I've been doing for years now, on YouTube, and before that even just myself. What was the bias in the options chain from the traders just from today as they position themselves heading into tomorrow, Thursday? So we had 1.46 million total contracts traded. And look at this, a heavy call side bias here today. 923,000 calls and 534,000 puts. If we break this down by time frame, look here. The delta ranges. You can see here that every single delta range, every single one is leaning call heavy. But the one I'm really interested in is that 0 to 20. Those are the short-term speculators. A lot of people would say the short-term gamblers. Hopefully educated gamblers. Educated speculators, we'll call them that, okay? Those are the shortest, that's the shortest term sample size. And this video is geared toward tomorrow, so let's look at that. That's really what I'm interested in. 305,000 calls, 274,000 puts. So we do have a call side bias, though it's worth noting it's not quite as extreme as the overall call put ratio. Guys, before you head out, make sure you comment your vote for tomorrow's wildcard stock. Just head down to the comment section and comment your ticker that you want me to cover tomorrow. And that'll be whichever ticker receives the most comments in today's batch of videos will win. And that'll be the wildcard stock that I cover tomorrow. Listen, if you got value out of this video, leave a like, subscribe to the channel. I greatly appreciate it. It helps out tremendously, more than you'll ever know. And I'll see you in the next one.